Good afternoon and welcome to the Analyst and Media Conference on the 2025 annual results. We are delighted to be able to present our results once again here at Implenia's headquarters, Implenia Connect, and would also like to extend a warm welcome to those attending the stream. My name is Sylvan Murky. I am Chief Communications Officer and will be guiding you through this event. We will be giving our presentation in German today. You can also select the English translation in the stream, and you can ask your questions afterwards in the Q&A, in the stream chat, or here in the room in German and English. Today's presentation is as follows. First, CEO Jens Vollmar will give you a business update on the annual results. CFO Stefan Baumgartner will then guide you through the financial figures, followed by an outlook from Jens. Afterwards, we will be happy to answer your questions in the Q&A session. I now hand over to CEO Jens Vollmar for the first part. Thank you, Sylvan. I would also like to welcome you to our 2025 financial results. This is a special year for Implenia. We are turning 20 years young. The day after tomorrow, incidentally, it will be 20 years since Implenia was first listed on the stock exchange. But we will also be looking back on 160 years of company history and will be able to celebrate it in style. Now to the year 2025. What a year we've had, full of highlights. Our markets have continued to develop positively. We are seeing excellent demand for our expertise. This is also reflected in our order book, which has increased significantly. However, we have not only increased the order backlog in terms of volume, but also significantly improved the pre-calculated margin. We were able to work on our mission statement, and, of course, we also worked on the productivity and profitability of our projects with operational excellence, which is the most important thing for us. I will come back to this in more detail later. Some financial highlights. The order backlog reached a new high of 8.5 billion Swiss francs, a sharp increase of 25%. We have achieved our EBIT targets and are particularly pleased not only with the absolute amounts, but also with the margin, which at 4% is already much closer to our medium-term target of 4.5%. It is also very pleasing that the free cash flow of 125.3 million Swiss francs shows that we have really focused on cash, on improved net working capital management, and with the equity ratio, we are now already significantly closer to our medium-term target of 25%. I will now like to go through the individual divisions and introduce them. I will start with Buildings. Buildings is Implenia's building construction and real estate business, operating in Switzerland and Germany. Buildings focuses on specialization in areas such as data centers. I'll come back to that later, as things are really quite a hot market at the moment, but also on healthcare and life science buildings, and ultimately also on defense buildings. This is a strong focus on specialization and differentiation, so that we can also expect higher margins there. Civil engineering is primarily the large infrastructure business, tunnel construction in particular. This business is growing strongly organically. Here too we have strong order intake, and here too with higher pre-calculated margins. And service solutions are service business, which is primarily characterized by Wincasa, but also includes our construction logistics company, BCL. However, we also have Planovita, which is a building services engineering specialist planning company. I would now like to go through the three divisions. Buildings. You see a slight decline in sales. That's the bad news, declining sales. But what's very positive? We were able to significantly increase our order backlog. We had already shown in the first half of the year that the order backlog had increased at Buildings. Now the positive news in the second half of the year in Germany as well. This means that we expect a significant reversal of the trend here, and we expect double-digit growth rates in revenue already this year. I would particularly like to highlight the outstanding performance in terms of EBIT, with an EBIT margin of 4.6% and 75.6 million Swiss francs, an important contribution to the group's overall results. And here, as I said, the focus on lower-risk contract models and on the specialized types of use in health, laboratories, defense, and data centers. Some projects that also underline this. At the top left is a contract we were able to win for our building contractor business in Bern, a laboratory building.
Also interesting at the bottom, in the middle, is a highly complex logistical modernization in the city center of Zurich, a building that we are converting for Swiss Prime Site with a pre-construction phase, during which we were able to work with the client to optimize the building in terms of deadlines and costs, creating a win-win situation for both parties. For us, and also for the client, this project is significantly less risky than in classic processing models. Now, let's move on to civil engineering. Civil engineering was able to further increase its margin, but was also able to further increase operating results and, above all, the order backlog in the complex infrastructure business. There are not many who can do that. We have incredible expertise in this area. We are in demand for tunnel construction. Our tunnel builders are now talking not only about tunnel construction, but also about underground cavity construction, because we have different applications. We don't just build roads and railway tunnels, we build deep repositories, we build cable infrastructure, we build access shafts and tunnels. So in that respect, it's fun, especially the market environment is fun. What is perhaps worth mentioning here is that we are continuing to focus on optimization in these small-scale civil engineering works, also in Switzerland. Compared to the capital investment, we still have below-average margins compared to the capital investment. We will also focus on this in the coming year. Here are a few example projects that underline our expertise. It's clear that not everyone can do this. Implenia can. We are well positioned. At the top left is the Zurich Winterthur railway expansion, a very large project which we were able to win last year. And in the middle, at the bottom in Sweden, a deep geological repository also shows what can be done with tunnel construction expertise. Let's move on to the service business. Here, we are not showing the order backlog, but rather assets under management, which is primarily Wincasa on the left at the top. Wincasa was able to further increase assets under management, but was also able to win some nice new mandates, e.g. for Publica, which will only be included in our asset under management portfolio next year. Wincasa was able to further improve its margin and further improve its EBIT. So, this is a good mix in our portfolio alongside traditional construction, as we have a service business that is lower risk, higher margins, and that is also moving in the right direction. Here, we will continue to examine whether we also have inorganic opportunities upstream and downstream, perhaps to our classic execution phase. Here, too, some example projects. On the top left, which I already presented in the half-year report, the Schönbuhl project in Lucerne Shopping Center. Why am I presenting this again? Because it underlines how we can work with our integrated skills. Wincasa takes care of the management. Planovita was able to draw up the plans for the building services, and with our modernization unit, we can carry out the total output structure. For a similar project, for which we have just received verbal confirmation this week, we will once again be able to carry out the modernization of a shopping center. So this integrated model and the collaboration between the service business and the construction business is extremely important. In addition to the divisions, we were also able to launch cross-divisional initiatives or continue existing ones. Last year, for example, we were able to certify 90 so-called lean experts in the area of lean construction. They then bring our application examples and our toolbox into the organization. This is extremely important for us. We want to have suitable cycle planning for every project. We have evaluated other means and possibilities, such as how we can use digital models to parallelize processes and how we can become faster.
Here you can see an example, the Gubris Tunnel, which we were able to complete over 40 days ahead of schedule.
Sustainability is also an important imperative that remains relevant for Implenia. We have a few sample projects here that show how we can significantly reduce our carbon footprint. Last year, we were also able to reduce our absolute carbon emissions. We were able to publish a sustainability report with new targets. How do we do that? That's important for us. We really want to become more sustainable. We no longer want to just report. We want to become more sustainable in our projects. Our sustainability experts help with the selection of materials. A lot can be achieved in this area.
Our construction logistics company helps us, for example, in the area of transport or vehicles, showing us how to significantly reduce journeys, how to transport more demolition material by rail, or how to use conveyor belts for excavated material, how to optimize planning, how to use low-carbon concrete. So there is still a lot of potential, and that remains important to us. Now, also, as I said, productivity on the projects remains important. We already presented some examples of AI applications in the first half of the year. In the second half of 2025, we were able to conclude a framework agreement with Oculi. This is a provider of visual AI. We now have many use cases here. We have use cases in the area of occupational safety that we are rolling out. The camera automatically monitors who is moving in which areas, who is safe and who is not. We have use cases in the area of addendum management here, and we have use cases in the area of construction progress monitoring. As I mentioned earlier, we are also trying to further optimize our value assurance approach, which is the most important process for us in the company. We were able to introduce a more optimized calculation last year. Today, we calculate the quantities as standard using BIM models, which are determined by BIM model. However, we have also introduced benchmarking tools to ensure that the calculated construction costs are really correct during the tendering phase. This means that we no longer observe construction or consider construction costs solely from a calculation perspective, but rather we look at projects that have been recalculated and verify them from different perspectives, using publicly available data from databases, but also with internal databases. Are the construction costs we determine in the zero base, so to speak, are they adequate or not? This is extremely important to us. And I also talked about new contract models in the first half of the year, which are important because the market is growing so rapidly. Builders can no longer use traditional tendering procedures in all cases. This means that we really need to improve our understanding of integrated project management models and partnership models. We have set up our own competence center for this purpose, which ensures that all projects outside the headquarters understand what contracts are, how to obtain information, and what these things look like from a technical perspective. We were able to build this competence center in the second half of last year. Last year, we have also won the first full-fledged IPD project for the Fehmarn Sound crossing. These are excellent projects for us because we are able to minimize the construction cost risks, which are not borne by Implenia. We determine the construction costs together with the client at a much later stage, once we have long been selected on the basis of our expertise. Before I now give the floor to Stefan, our CFO, we would like to give you some insights into our everyday projects.
At Implenia, we improve the way people live, work, and move. We plan, build, and operate buildings and infrastructure, safe, sustainable, and innovative.
Bevölkerungswachstum, Urbanisierung und der Wandel hin zu erneuerbaren Energien erzeugen eine große Nachfrage nach moderner Infrastruktur.
Safe and efficient implementation is based on well-planned processes, close coordination, and precise execution. This is particularly true for milestones such as a tunnel breakthrough.
Dieses Projekt ist natürlich besonders, weil es einfach unfassbar groß ist und dadurch auch sehr komplex.
When constructing while operations continue, minimal disruption for users must be combined with the desired construction quality. Implenia implemented this in an exemplary manner during the 4-track expansion in Leistow. In bridge construction, Implenia combines in-depth planning and implementation expertise. Every bridge is unique and will last for generations. Implenia builds sustainable energy infrastructure with a high degree of technical precision. Extensive experience and innovative solutions included.
Die Division Buildings entwickelt, plant und realisiert große und anspruchsvolle Immobilienprojekte.
Real estate for healthcare or research and development is particularly demanding in technical terms. Digital tools facilitate the complex coordination involved.
Eine digitale, papierlose Baustelle hat den Vorteil, dass alle Projektbeteiligten immer die aktuellen Daten zur Verfügung gestellt bekommen und somit die Ausführungsqualität hoch ist.
Data centers require the highest precision in execution and absolute adherence to deadlines. Modernization connects the existing with the future. This breathes new life into iconic buildings.
Die Division Service Solutions von Implenia bietet kundenorientierte Dienstleistungen für Engineering, Planung, Logistik und Immobilienmanagement.
Integrated operating concepts are required for mixed-use sites. Wincaser's center and mixed-use site management ensures smooth operations and value retention.
Und ganz wichtig ist ein nachhaltiger Betrieb, langfristige Werterhaltung und kontinuierliche Qualitätssteigerung.
To ensure that building operations run smoothly, the building technology must be right from the outset, a task for Planovita's engineers. BCL ensures efficient construction site logistics throughout the entire construction process. This saves time and money and reduces risks. Ensira complements the portfolio with specialized solutions in building physics, acoustics, sustainability, and energy for future-proof real estate. From infrastructure to real estate to services, Implenia has been combining expertise, innovation, and responsibility for 20 years, and that with more than 160 years of experience. Together with our customers and partners, we are shaping the future.
Hello everyone, and welcome from my side as well. All divisions have been successful this year. Allowing us to increase our results accordingly.
Our order backlog increased by 1.7 billion Swiss francs in 2025 to a total of 8.5 billion Swiss francs, representing an increase of nearly 25% compared to the previous year.
In addition, the pre-calculated margin rose by 0.5 percentage points to 7.8%. Revenue was slightly below 2024, reflecting the development of the order backlog in previous years. The lower buildings order book led to reduced real estate revenues in 2025. Foreign currency effects in 2025 were negligible. In operational units, natural hedging occurs. Let's have a closer look at Implenia's profitability.
In 2025, we generated an EBIT of 140.5 million Swiss francs, an increase of 10 million Swiss francs, or 8% compared to the previous year. The EBIT margin increased by 0.4 percentage points to 4.0%, achieved by all divisions. We were able to increase pre-tax profit despite higher financing costs, also due to the early refinancing of 2 bonds. The tax expense in 2025 remained in the normal range, unlike 2024, which was affected by one-off effects. During this period, reported free cash flow rose significantly by 179 million Swiss francs to 125.3 million Swiss francs. Free cash flow was materially improved through increased EBITDA, about 10% higher year-on-year, and through a greater focus on net working capital, particularly increased advance payments. Our goal remains to further improve free cash flow conversions. At the end of December 2025, cash and cash equivalents amounted to 533 million Swiss francs, an increase of 131 million Swiss francs compared to the previous year. Furthermore, we hold 125 million Swiss francs in short-term fixed deposits,
allocated to the early refinance bond maturing in March 2025. We continue to see significant potential to improve net working capital, especially in claims and change management. The equity ratio rose to 23.5% as of 31st December 2025. Adjusted for the fixed-term deposit from the early refinancing of the bond maturing in March 2026. In addition to strong operational results, the surplus of the Implenia pension scheme contributed to this positive development. As of 31st December 2025, the company had full access to all credit lines. Furthermore, we extended the maturity profile through 2 successful bond issuances in 2025. Based on these financial results and the further strengthened balance sheet, the Board of Directors will propose at the annual general meeting on 31st March 2026 an increase in the dividend to 1.40 Swiss francs per share, representing an increase of approximately 55%. In summary, we improved operating cash flow by 218%, and net debt was reduced by 61 million Swiss francs. The maturity profile was extended with the 2 refinanced bonds. The next outstanding and yet unrefinanced bond is due in 2028. The equity ratio further increased by 2.3 percentage points to 23.5%. Implenia improved its performance in 2025 and is a strong company, financially well-positioned for sustainable growth over the next 5 to 10 years. I now hand over to Jens for the outlook. Thank you, Stefan. How do we move forward? Let's look at the outlook. Implenia is very well positioned. Some of you may be familiar with this slide. In Switzerland, we are market leaders in various sectors: healthcare construction, research and education, data center construction, and in tunnel construction, we are internationally recognized in our European home markets, holding leading positions. This is also reflected in our order backlog, and we receive requests at a very high frequency. More importantly than simply increasing the backlog, as I mentioned, we have been able to improve pre-calculated margins. This is the best indicator we have to estimate future earnings. Aggregated from all incoming orders, it has increased by 0.5 percentage points to 7.8%. The order book still contains older orders with lower margins. This means that the new orders were secured with significantly higher pre-calculated margins. We remain selective, focusing on project profitability. We are not pursuing volume at any cost, but it is encouraging that we can benefit from these market developments and that we are well positioned. On the left in the chart, you can also see how much top line or production output is secured for each year. You'll notice that at the end of 2024, we had roughly the same secured production output for 2025 as we did at the end of 2025 for 2026. So, we do not expect a significant change in revenue this year. However, looking at what we had secured for 2027 at the end of last year, we had already secured 25% more top line than we had at the end of 2024 for 2026. This means that if everything continues unchanged, we can expect strong revenue growth starting next year. The same applies for the following years. Here you see some more recent example projects we have won, including large infrastructure projects, which take time before revenue is realized. Our project and tender teams estimate, based on schedules, when each project will generate revenue, and this is the aggregation from all projects shown here. You can see that the big infrastructure projects we have won only start generating revenue later. In the top right, you can see the dual-track expansion between Zurich and Winterthur. Revenue will only start coming once the tunnel boring machine is operational. This will take another 2 to 2.5 years. This illustrates the order book. The megatrends remain unchanged. The population is growing, the population is aging. Defense, the need for defense infrastructure, that remains unchanged, perhaps even stronger than in the past. Markets based on current forecasts are positive. All are positive. Especially for Germany, we naturally see a positive development. The availability of construction loans has improved through various legislative initiatives, site promotion law. But you also see here the Frontier Risk Limitation Act, which simplifies opportunities for private funds to invest privately in infrastructure. We also, of course, see the demand is there. The need is there. So yes, we are in a good market environment. And when we then look at where Implenia is positioned, we see even much higher growth rates. Data centers, things are really heating up. So in Switzerland, but also in Germany, there we are being asked for a lot. Today, we can't even process all the inquiries. Then, the board of directors and the group executive committee have, based on this market environment and our position, worked on our guiding principles. That is the basis of our actions, the foundation for our employees. What have we done? We sharpened our vision, refined our strategic priorities, adapted our values with respect to performance. We now have only 4 values, and one of them is new: performance. We want a performance culture. We have also put performance at the forefront of our strategic direction, and we want a mindset and initiatives that also favor this growth or these growth opportunities. We expect capital-efficient resource allocation. So we don't just want to invest capital, we want to generate returns on this capital. We want to generate cash flow, and we want to grow profitably in the areas in which we operate. Therefore, we also launched a culture program this year, which will be rolled out across all areas of Implenia to embed these behaviors, to spread the performance culture throughout, and above all, to establish the economic framework conditions needed to transport it to every corner of Implenia. Now, what are we doing this year? We say it is an investment year. We will invest a manageable amount in this growth. We want to participate in it. We will build teams in the data center area, more teams than we have previously built. We have always hired people very prudently. That is also the right approach. We will continue doing this. We want to have personnel when we take on projects. For us, in the value assurance process, it is very important that when we calculate or take on a project, we have the competent employees at Implenia. Therefore, this year we will particularly focus on building up the data center area in the division led by Adrian Viss. We will also hire teams in the healthcare and laboratory construction sector, particularly in Germany, to meet the high demand, the additional demand that we currently cannot even process. I hinted at it. We want to streamline civil engineering. We will continue working so that this profitability increases. We are not there yet. It is clear that we will make certain small organizational adjustments within the civil engineering division, perhaps merge certain units, optimize our construction yard structures. This will cost us some resources this year, so that next year we can benefit from higher margins. We also want to expand, including inorganic growth, but these activities also cost money and impact our results this year. Therefore, we expect roughly 150 million Swiss francs. So we expect increased profitability in EBIT from the underlying business, but we deliberately and very purposefully want to invest 10 to 20 million Swiss francs. And to make clear what comes out of it, we have already planned for next year as well. It is clear for us that next year we want to achieve more than 150 million Swiss francs operating result based on these investments. Medium-term targets remain unchanged: 25% equity ratio and above 4% margin. Then, let me add, there is nothing as constant as change. We have two changes in the Group Executive Committee. Anita Eckert will focus on a board career. She will not be replaced in that role. I will take over directly as division head. We have independent businesses with their own executive managements like Wincasa or BCL Construction Logistics. I believe Anita Eckert has done an excellent job here for over 6 years, including positioning the then division specialties and today the service business. We also have the departure of Claudia Bitwell, former CHRO of Implenia for over 6 years, replaced by Petra Feigl. Petra is excellently suited to accompany the next growth phase of Implenia from a personnel perspective. We are pleased she will join Implenia in September. In summary, Implenia is top positioned. We have growing markets, we can benefit from these markets. We are financially well positioned to drive these growth investments. We will reduce the capital-intensive small-scale business and focus on areas where we can differentiate better. Thus, we will grow with a differentiated offering. And with that, Sylvain, I thank you for your attention and hand back to Sylvain Murky. Many thanks.
Thank you, Jens. Before we move to the Q&A, we invite you again this year to events. 2 insights into our activities, one at the Marienhof mega project in central Munich, and the second at Zurich's Seal City, a center managed by Wincasa. On June 3rd, we will hold an Investor Day in central Zurich, giving in-depth insight into the strategy just presented. We will also visit the modernization of Jelmoli. Finally, we celebrate 20 years young on September 5th, shaping 160 years of the future with a big event. We look forward to seeing you there again. On March 31st, we hold our General Assembly. On August 19th, we present the H1 2026 results. If you have follow-up questions, we are available at lunch, or as always, through the usual contacts. And with that, we start the Q&A. Again, Jens and Stefan, you can come forward. You can enter questions in the chat in German or English, or ask them in the room. We will pass the microphone around. Please state your name, who you represent, and speak only into the microphone for translation purposes. Let's start in the room.
Holger Frisch, Zürcher Kantonalbank. I had 3 questions. First, the EBIT development, 140 million this year. This is now a split. 50% from associated companies and joint ventures, 50% classic Implenia. 10 years ago, it was still at 10% from the associated ones. What should one imagine here? Where is this going in the future? Is that the first question, or would you like to ask them all at once? I can do it. Then I saw in the cash flow a release of provisions of over 30 million, significantly higher than last year. Perhaps you can explain where that comes from. And then I am generally interested in the business development of Wincasa. Where are we currently with the EBIT margin, and what are the ambitions there?
Exactly. Maybe generally associated companies. In civil engineering, we work a lot. These are the JVs, the joint ventures, or our AGs, working groups in civil engineering. There we also have growth. We also work, due to resource availability, due to local partnerships that we need, also a lot in joint ventures. Especially these complex, large infrastructure projects make it necessary that we often work in joint ventures. This trend is also important for risk sharing, or that is also an important aspect, that we work together with strong partners. And there we have a very sophisticated process on how we select these partners and how we check them in advance, that we do this.
So the trend here, and by the way, these are also very profitable projects, and on average, more profitable than these small decentralized projects. Therefore, the trend is understandable and correct from our perspective. But I don't know if you want to add a small addition, so it's really that we want to continue to grow and expand in these large projects. But in 2025, there was also an additional effect from an associated company, which is CHAM Swiss Properties, where in 2025, due to revaluation or reassessment, it had a significant impact. Yes, then perhaps the release of provisions. Basically, this is not something we do centrally for earnings management, but these are projects. We have for each project so-called project accounts, and the project managers, and together with them, we always have this triumvirate: finance, project manager, and also legal, if necessary in such cases, forecast the projects. Sometimes provisions are formed, sometimes provisions are released. What we noticed is that last year we were much more predictable, both regarding legal cases and final cost forecasts of the projects. Therefore, it is the result of many individual project decisions and not a centrally controlled process for forming and releasing provisions. If I may add from an accounting perspective, it is really the formation, use, and release of the provision and the net of it which is central to consider. But it is like this. Every project is evaluated individually, and we become more predictable, and this shows in the provisions. Then the last question regarded the business development of Wincasa. We are on track with Wincasa. We have a very high-margin business at Wincasa. We were able to expand existing partnerships, significantly extend certain contracts. We continue assuming that we, as originally planned in the acquisition, and if we now look what is coming from next year, 4 billion in assets alone from the management mandate of Publica, we are very optimistic about Wincasa's business development. Thank you for the answers. Whom may I hand the microphone to here in the room? Up front. Thank you. Thomas Roberto, UBS. I have two questions, both regarding the guidance for 2025. This 10 to 20 million growth investments, how much of that will also occur in 2026? So how much of it is personnel costs, and how much are really one-time costs, which only occur in 2026? The first, and then secondly, for 2027 outlook, you say greater than 150 million, right? So that could mean a lot. Could you perhaps break it down a bit more precisely? Because at the lower end, it would mean that there would be no organic improvement, or the organic EBIT would then already be 150 million by 2026. That's the case. Maybe I start with the second question, if that's okay for you. The outlook 2027 above 150 million, we make clear that we will improve. We will also give an update, of course, end of the year, where we exactly stand. Then we can say much more predictably where we end up. Above 150 million does not mean 150 or 151. We naturally want to close clearly above 150 million next year, but we will give an update end of the year. As soon as we also know how the order backlog, the pre-calculated margin, all these things have developed, we can guide next year more reliably. Today, it's above 150 million, and based on current numbers, we can look to the future optimistically. And the other question, how much of the 10 to 20 million Swiss francs is in which area? Of course, depending on M&A transactions, such a due diligence quickly costs a 7-digit amount, or one has to see how much of such opportunities we really examine in detail. These are very cost-sensitive for us. That's why we also gave a range, 10 to 20 million. These are typical one-time costs. They do not recur. Then there is a certain part, a single-digit million amount, that we invest in building competencies and teams.
This is rather under 5 or up to 5 million Swiss francs.
These costs remain on the P&L, but they generate revenue and thus also margin. Therefore, a precise breakdown we did not give, because we are still dependent on how much we actually build up. Depending on how much cost we have for M&A and such things. Very well, thank you. May I hand the microphone to someone else in the room? Up front, thank you. Torsten Sauter, Kepler Cheuvreux. I have a question for Mr. Vollmer. If I'm correct, I believe you were quoted in a real estate journal saying, "Under your leadership, Implenia should become twice as large." That was probably a vision. I'm interested in where and how Implenia is supposed to grow, and how much M&A is part of the plan. That is my personal ambition. I'm still young and have some years ahead, and I haven't specified what size we should grow to. But I am convinced, yes, we can double our size. We can generate significantly more revenue and profit than today. The markets are ideal, and we are ideally positioned in these markets. The great thing is, we can grow without increasing structural costs. Within the structure we have today, we can generate significantly more revenue. How do we want to grow? That can't be answered for the whole group. It has to be answered divisionally. In building construction and in the real estate business, we want to push specialization forward, especially in data center construction. And there we see margins. They are significantly higher than our classic building construction business, so clearly higher by several factors. And this trend, and also the age structure of the population, it is completely clear. We are getting older, or the population is getting older. More healthcare and healthcare buildings are needed. And at the locations where we operate, there is also a lot of research, especially in Switzerland. And there is also a need for laboratory buildings now, as well as data centers, as I had mentioned. Then, in civil engineering, we actually don't need to be insanely innovative. There we already have the right positioning and competence. There we can grow organically. We have inquiries for hydropower. We have inquiries for tunnel construction, infrastructure. We see the growth rates, the studies that currently exist. There we grow organically. We don't need to buy anything. And also in building construction, we can build these teams ourselves. Naturally, it can happen that if an ideal target for one of the specializations in building construction comes up, then we might look at it. But inorganically, we only want to grow in the service sector, or there it is really new competencies that we have, that we perhaps could not build organically so quickly. As we might wish, especially in the planning area, that takes quite a few years until they then have the competences, until they have the expertise. So we grow within the divisions along these directions. The inorganic part has a certain significance, but I think especially in civil engineering, there is no need for inorganic growth.
Thank you, Alexandra Bossard, UBS. I have a follow-up question about this inorganic growth M&A. If something larger should come in the service business, would you also finance that with shares? So how committed are you to the investment-grade credit rating? Thank you. So we do hope that we will get credit ratings, or if we don't already have such. Basically, that depends very much, but at the moment, a capital increase or share-based purchase is not an option currently, or really not a topic. Therefore, we assume that we ourselves have enough firing power for these objects that we are looking at. If necessary, there might also be some credit lines for that, but I don't know how you see it. Equity is really not necessary at the moment. We have significantly strengthened our balance sheet in the last few years. We have a completely different balance sheet compared to a few years ago, and therefore also at this stage. We see no need to do it via capital increase or anything else, but we will be very careful in M&A, so we will look at it very closely, of course, but it is not considered that we want to do it indirectly via a capital increase. And maybe also one more point for us regarding M&A. For us, it is completely clear. M&A must be attractive in the market. It must be attractive for the shareholders,
And that without involving any synergies or any planning of synergies, we must be able to make creative deals based on the existing business and the clean business planning standalone. And otherwise, it is simply not an option for us. Thank you.
Any further questions right now here in the room?
Johannes Brinkmann, up front.
You said in data center construction, things are booming. How many projects do you have under construction, and where are they?
The number of projects under construction, that is, a handful in Switzerland currently. For example, in Beringen, we currently have a large project where we now, and this is perhaps the interesting part, not only talking about core and shell, we also talk about the MEP area, so the entire fit-out. And these are projects that can quickly involve several hundred million francs for a data center. And that is already large volume for us that we can handle. And there we have built up specialists, but it is a handful of projects in Switzerland that we currently have in processing. Only in Switzerland. And of course, we also have things currently that we are looking at in Germany, but we currently have none under construction there, only in the bidding phase.
Very good. I have some questions from the chat from Rainer Weihofen, Finanz und Wirtschaft. Can you tell us by how much a realized margin on average deviates from the pre-calculated project margin?
Yes, hopefully less and less. In the past, one can say, I believe 5 or 6 years ago, I have the number in mind, we were roughly 1% off from what we had calculated. But that was before the introduction of value assurance. Today, we have much more precise forecasts as a rule, and we saw that last year, projects close as we estimate them, and surprises also at the end of projects are practically no longer there. We have an ongoing review of project margins on a monthly basis, together with finance and project management, and project management adjusts the margin early if necessary. So in that sense, we are very forecast accurate. Stefan, do you have better numbers? No, absolutely not. We have really improved extremely over the last few years, and what is really remarkable is that since the introduction of value assurance, there have been no big surprises anymore. And that is important, so this reliability is central in this business. Yes, thank you very much. Lucas Spang from Tigris Capital asks 3 questions. The first is, how much revenue did you generate in the fiscal year in the data center segment, and what is the outlook for 2026 onwards? I don't have the number for data center revenue here. We have to come back to that. Maybe then under 5%. Yes, so clearly. I don't have the exact revenue, but it is still in the single digits. That is certainly currently under 5% of revenue from data centers. Margins are significantly higher, but we can also take the question back and answer it in detail later. But the share proportionally should of course grow in the future. Yes, and the growth rates in this segment are also significantly higher than in classic building construction. Then the second question from Lucas Spang. You spoke of higher expected revenue growth in 2027 and following years. Is that already roughly quantifiable from today's perspective, possibly as a lower bound? Good question. Thank you for that. What we see today, we see that for next year we have secured production output that is 25% higher than the production output for 2027, than the production output we had secured at the end of 2024 for 2026. If now everything continues one-to-one and unchanged, if we acquire exactly as many projects or acquire revenue for next year or acquire production output, then next year revenue or production output will be 25% higher. Assuming nothing changes, then it is so. If we continue to acquire better, it will be higher. If worse, it will be a bit lower. But today, the best forecast is, if it remains unchanged, we have 25% more top line next year than this year. Very good. The third question from Lucas Spang. How do you currently view the German Special Fund as of today? Are the funds already coming to market in the form of tenders or projects? An up-to-date assessment and further expectations would be helpful. So, we are asked this a lot, and basically it is such that we can record strong order intake in Germany. The German infrastructure market is very large. The demand is huge. I was recently in Germany. You are also regularly there, and we see that bridges, for example, have incredible renovation needs. We have many bridge constructions. We have, for various reasons, because they are in need of renovation, because they need to be expanded for defense infrastructure. How the projects are financed, whether from the classic budget, quasi or appropriation or state budget, or from special funds, is not always disclosed to us. Therefore, what we can see is that we have strong order intake in Germany. The Nordmainische S-Bahn, bridge projects north of Stettin, or also east of Frankfurt, where we were able to win a large bridge projects. Whether they come from this special fund or from the budget actually does not matter to us. We just see that already today we can benefit from the infrastructure demand in Germany. And we also assume that this special fund will lead to growth rates that are not yet reflected in the markets today. Thank you. Mark St. John Webb from Quero Capital asks in English, "You have reached good levels of profitability in buildings and service solutions, but civil engineering EBIT is still at only 2.9%, which seems below your European peers. How do you explain this, and what are your targets for this next year, or this year and next year?" Thanks for the question.
It is such that we also expect higher margins in civil engineering, especially in the large infrastructure segment. Why is the margin still low? We still have a significant share of decentralized, small-scale civil engineering, especially in Switzerland. This business is below average in margin, and we want to further reduce this business, and therefore, we expect rising margins. We have prepared corresponding budgets that are significantly above the current level, and our division head is sitting right here. He has committed himself to these rising margins. Thank you. Mark St. John Webb continues. You set out EBIT margin targets of above 4.5% for the medium term quite a few years ago. Can we consider 2027 to be the medium term of 5 years ago? We have always said 3 to 5 years is roughly medium-term targets. It is actually such that we are now at 4%. So we have already come a significant way closer. We assume that next year we will come significantly closer to 4.5% as well. And once we have reached 4.5%, we will gladly confirm new targets then. But the 4.5%, yes, we see, we have increased approximately 0.3% each year. We continue to expect a positive development also on the margin. Very good. You can continue to submit questions in the chat window. Do we have questions here in the room? Further then, please raise your hands. I see something. The microphone is coming. Yes, Joel Knupp, Zürcher Kantonalbank. I have 2 questions. The first concerns, you have often spoken about optimizing net working capital. Where do you see a sustainable range for net working capital as a percentage of revenue? And where do you see the biggest levers to get there? And the second question concerns debt financing costs. Also, after refinancing the 125 million bond, which matures in 2026, can you give a value or a range where you expect the debt financing costs to be, or in which direction they are expected to develop? I'll maybe start. What are the levers in network capital management? We do not give exact quotas or guide to these exact quotas, but what we can say, what are the levers? First, fast invoicing. Measure quantities quickly, especially in civil engineering where we have unit price contracts, quantity contracts. Measure quickly, invoice quickly. Advance claim discussions. Quickly get to the table with the client and resolve things. Especially also in the large infrastructure business, in tunnel construction with geological changes, processes were still very slow in the past. We have various means and ways to optimize that. Avoid legal cases or maybe do a settlement earlier so that there are no large open items. In this sense, there is a whole range of levers. We focus on cash flow. We have included this in our strategic directions. This year, for the first time, we also set financial incentives for employees to positively promote this behavior. I can say, this year, for the first time also on net working capital.
It was always part of our bonuses, but we have created positive incentives to optimize net working capital. And debt financing costs. Debt financing costs, I start with 2025. I think we had high debt financing costs in 2025. On the one hand, we refinanced 2 bonds or early refinanced them. That gives costs. On the other hand, there are also duplications, so that you simply have higher interest burden over these duplications. And one must not forget, there are also individual bonds that have matured. They were, of course, concluded during the negative interest period with lower burden, which also played a role. From that, the burdens were higher in 2025. And in 2026, due to the fact that we no longer have to refinance bonds, and due to the fact that we can avoid the duplications, we expect that debt financing costs in 2026 will be reduced. Thank you. Are there further questions here in the room? I see a hand back there. Yes, thanks. I quickly have another question. You have, if I understood correctly, reduced personnel. And I think that has to do with Implenia wanting to develop very much into a white-collar company, into a scalable company, if I may. What I now ask is, if there actually is this construction boom, then you are dependent on joint venture partners and subcontractors. Do they even exist? If this special fund should now scale, does it have these people, these business partners who can then also scale accordingly, or is there a bottleneck problem? So, thanks for the question. We are not simply reducing personnel to reduce personnel. For us, personnel per se is not a relevant size. We focus on margins, projects, and key personnel and competencies. I think that is important. We have reduced in the SG&A area, and we reduce there where we believe it is not a key competence for Implenia, and where we have enough possibilities that we can also staff blue-collar personnel. Maybe where have we reduced? We reduced in areas where we believe revenue is rather expiring or declining mid-term, or there were some projects that also caused this. But it is not such that we are afraid or concerned that we will find too few blue-collar personnel, because all key persons, e.g. foremen, senior site managers, we keep, of course, that is important to us, but just blue-collar personnel providing work performance, there we do not worry. Or all technical competencies, key personnel for the construction sites, we would not reduce those in the current time. And if I may add, it also concerns all subcontractors and all GWP partners. We have over 1,000 strategic partnerships with suppliers and subcontractors. We have been working successfully with them for many years. We secure our capacity, and for this, it is also very, very important to have a very reliable partner, also in relation to them. That is us. And from that, we also have higher priority, and we really manage this. We monitor it very closely and manage it, but we are confident that we will get these capacities accordingly. Thank you. I have another question in the chat from Lucas Spang again, Tigris Capital. Also, in hospital construction, many billions should flow, e.g. in Germany, also from the special fund, 6 billion euros this year. How relevant is this segment today, and what expectations do you have here? Thanks for the question. This is a very important segment for us. Health, laboratory construction, and the data center segment for growth in building construction. The German healthcare market is gigantic, and we have a lot of competence in Switzerland. You have dedicated teams we are currently building up in Germany. We are currently establishing strategic partnerships for these upcoming projects with high-rise partners, with large German companies. We have many projects coming, for example, in Munich, several billion francs. But we also have in Hamburg the Asklepios Clinic, which, for example, is coming. These are concrete projects. We have in southern Baden, at Waldshut, a project directly in front of us, where we are now positioning ourselves with our own competencies and with partners in Germany, because we would not tackle a €1 billion hospital in Germany alone. We would always go together with partners for risk sharing for the proper competence distribution and resources. So we will benefit from that and hope to benefit from it as well. Thank you very much. Another question from Lucas Spang. Do you expect a further increase in the order book this year after the very good level in 2025? Maybe to make it understandable, how do we approach orders, and Stefan, I, and also German Gruniger, our general counsel, we are in the Value Assurance Committee Level 1, so with particularly large projects we are involved. We win orders then when we have the resources, when we have the technical personnel to actually tackle these orders. We take on orders when you have a favorable contractual relationship. We take on orders when we can confirm the contract schedules and say, yes, this makes sense, it is realistic. When we have the capacities for the offer preparation, when we have the right subcontractors, the right partners, JV partners, then we take on projects. Then we say yes to the calculation in the offer phase. And then in the end, we also say yes to a contract, that the order situation has developed so positively, and we simultaneously could increase the margins, shows that we are very well positioned there. Now, whether the order situation will continue to develop, the market environment is there. We also believe that we can continue to acquire very selectively. If it continues to rise, we need additional personnel. We want to invest in this year. Hence also these expenses for personnel that is not yet revenue generating today. And insofar we do not guide on the order book, for us profitability is important, but the environment is positive, or to shorten it that way. Thank you. Do we have final questions here in the room? Otherwise, thank you very much for your questions. Thank you for the answers, Jens and Stefan. We herewith close the Q&A here in the room. We are of course available outside afterwards. And we also close the event here in the room and on the stream. I wish you all a good meal here at Implenia Connect. And to everyone watching on the stream, a wonderful day. Goodbye and see you next time. Thank you very much.